Hello everyone, and welcome to this presentation on the correct way to trade pullbacks. Welcome. Now, pullback trading is one of the most popular and common ways in which to trade the markets, virtually any market in any time frame. But what I found out in my roughly 38 years of trading is that most people trade them incorrectly. That's why they have a very difficult time in sustaining any type of consistency. So therefore, I'm going to show you what I feel is the correct way to trade pullbacks, extremely simple and a very easy way in which to trade them. Once again, thank you for joining us today and welcome. My name is Primo. I am the president and founder of Specialist Trading. And for those of you who are not familiar with our website, we are, as you're going to be seeing today, first and foremost, an educational website. It's our philosophy that the reason why most traders fail is because they're basing their trading decisions on faulty information, or else they're relying on someone or something to tell them what to do. In my 38 years, I found out that this is a recipe for disaster, is that everyone really needs to find their own way to trading. That's how you'll get on that road to consistency, rather than just trying to mimic or mock what someone else is doing in a trading room or what someone has suggested on TV or something such as that nature. So the point is, at Specialist Trading, what we do is we provide you with all the information, the tips and techniques that I've accumulated in my 38 years, and then mentor you with this information to mold and fit our strategies to meet your needs. That's what we feel will ultimately put you on that correct direction towards consistency in your trading. Now, as I stated, I've been trading for 38 years. I started on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of them I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist is, if you ever look at those old pictures, you can Google them up, of traders on the floor. Specialists were those gentlemen behind those large wooden podiums that used to shout and scream and make markets in roughly about 50 stocks. If you wanted to buy or sell a particular equity, you went up to the person who specialized in that. So that's what I did. I was a specialist. I traded through the crash. I was on the floor, as I stated, for roughly 16 years. I know what works in terms of consistency, and I know what doesn't. Therefore, this is what I transfer and teach onto all of my students. So today I'm going to show with you what I feel is the correct way to trade pullbacks. I'm going to show you a lot of examples. I'm going to teach you and reveal to you what I feel is the correct way. But we are required to show you this before we begin anything. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results, what in my opinion is the correct way to trade not candlesticks, but pullbacks. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you are taking a moment to view this disclaimer, I would also like to take this moment to invite each and every one of you, if you haven't started to follow us already, but to follow us on Twitter. There's our handle right there, at SPCLSTTRADG. Every day I post some great free information, anywhere from trading signals that our strategies have currently generated to just daily financial wisdom, little tidbits to get you on your trading day. In fact, just a week ago, we posted that one of our, or actually multiple signals, had generated sell signals in the market. And so most of our traders who are members of that particular course would have been able to follow this entire downswing that's happened this past week. So lots of great free information. Follow us on Twitter right there at our handle. And I would also like to invite each and every one of you to join us at the Traders Super Conference. This is going to be in about 3 weeks in Las Vegas. This is October 17th to 18th. I was asked to speak by Trading Winds. They're putting on this presentation. It's 2 full days of education, 7 trading speakers. Yours truly, I'm going to be speaking there on futures and Forex markets. There's going to be a cocktail reception, a panel discussion. As you see there, that is the link that you would like to copy down there to give more information. I believe there is a video also giving you more information about how to join us there. I'd love to meet you. And I think the best thing about this Trader Super Conference is that it's going to be held in Las Vegas at Caesar's Palace. So you'll have all day to learn a lot of great information from a lot of great speakers, and then you'll have all night to relax and party if you'd like. So if you're interested, once again, here's the information. Copy down the link at the very bottom there. And yours truly will be there. And I'd love to meet all of you. I'd like to get a chance. Last time I spoke this past year, I was able to speak to a lot of our current students and meet a lot of you. So it'd be a pleasure to meet many more of our new students as well. Okay? Now, before we begin, once again, just our philosophy is to teach you how to trade. So many websites and educators really want to force feed you with all these signals and different ways in which to trade, and they tell you what to buy, what to sell on a daily basis. They tell you when to buy, when to sell, which markets to trade, which ones are the ones you should be in, which ones are the ones you should be out. Once again, I have found in my trading career that this is a recipe for a disaster. You should be given information and education that will give you, clues along the way, but you should never be told what and how to trade. This should be ultimately your own decision. So as you see here, my goal is to teach you, not to force feed you signals, but to teach you how to trade with a specialist edge. And that's what I'm going to be doing today. And the reason why I say this so strongly is because my first year or two on the floor, I struggled tremendously. And probably, many of the things that you are going through right now, I went through already. I didn't think I was going to be trading much longer because I was doing all the things that conventional wisdom tells you to do, but I didn't have anything to show for it. I was lucky enough to have some mentors on the floor that were able to turn my way of trading around. And this is the same, everything that they taught me, the concepts, the strategies, the techniques are the same things that I teach onto my students and our members. So it's the edge that changed my trading, and this is the edge that I teach most of my students, okay? So since this is an educational site, this is going to be a class today, and just like all classrooms, I want you to ask me questions, but please wait till the very end of today's presentation to ask any questions. I have a lot of slides to share with you today, a lot of information, but please remember that many times we will slow down the presentation many times if we stop to ask questions. So if you're, the only question I will answer is if you're having technical difficulties or if you have to leave early, this presentation is being recorded. You can go to Pro Trader Strategies and you can ask them to send you a link to this recording. Okay? All right, so questions at the very end, probably in the next 20 or 30 minutes from now. Let's begin. Here's what you are going to be learning today and what I will be covering in today's class. I'm going to share with you the wrong way to trade pullbacks. Right off the bat, the way most people trade pullbacks, the way I started trading pullbacks, and the reason why there is no consistency in that way of trading. And then I'm going to share with you a simple but high probability technique for trading pullbacks. And this is in all markets and all time frames. So you don't have to say, well, Steve, I'm different from most people. I trade monthly charts on the currency pairs. Or you may say, no, Steve, I trade tick charts on the E-mini futures. It doesn't matter. This technique transfers onto any market, any time frame, and any direction. I'm going to show you a lot of examples. All right, so just a brief refresher course. In order to trade pullbacks, we need some type of a trend first in place. Okay, here's a nice ideal generic example of an uptrend. And as you notice, uptrends are very rarely just straight up. A lot of people think, well, it's a straight up market, that's an uptrend. Uptrends have this kind of stair-step approach, this straight up, down a little bit, back to straight up, back down a little bit, okay? And so the same thing works with downtrends. They don't necessarily go straight down. You have this downward movement, a little bounce, then another downward movement, and then another bounce. So what we're trying to do when we trade pullbacks is we're trying to set some parameters or some type of guideline so that we know that we're in an uptrend or a downtrend, we're in a trend, and then once we've reached some certain levels, well, on the sell side or on the upside in a downtrend, well, then that's going to stop, the pullback will stop, and then we'll resume the trend. So as you see here, at this point, circled in green, we had an uptrend in place, and then the pullback took place right here. Now, perhaps we met some parameters, some Fibonacci, some Elliott wave, some Gann line, something happened right here, and so the trend stopped, and then we went back up, okay? And now we have a little downward, contra trend right here. So we add the same parameters. After all, they worked perfectly this time. So we add the same parameters, and we decide to buy here, and we'll have the next leg up. And so you jump in and buy, and then this is what usually happens. Does that look familiar to anybody? Okay. How about on a downtrend? You'll have an initial move down, and here's the pullback to the upside, the little bounce. It meets all the parameters, gets to all the sell levels, and then the trend resumes lower. Now you have another contra trend to the upside, another bounce in a downtrend. It meets all of the rules again that you applied originally, so now you decide to sell some more, and after all, you're going to have a real nice move to the downside, so you decide to sell, and then this was what happens. It continues in the opposite direction. Now, I say this if it looks familiar to anyone because this is the way I used to trade pullbacks, and this is what happens oftentimes with conventional wisdom and the ways of trading, conventionally trading pullbacks, because oftentimes it will work, but then when it doesn't, you're left with a full-fledged beginning of another trend, and you're going the opposite direction. You stand to lose a lot of money. In fact, let me show you some of the most common ways in which people trade pullbacks. Support and resistance is a very, very common way in which to do this. Now, this is an ideal chart of support and resistance. Basically, you have a nice uptrend here. Every time you get to a certain point where you stop, well, the support and resistance traders say that's the resistance. The sellers have come in. But then you come down to support where the buyers come in, and then the trend resumes. So you have this type of stair-step approach, which is exactly what we're looking for. And on paper, it looks great. This is what you want to find, and this is what you're looking for to trade pullbacks. Here's the only trouble. Oftentimes, it will look like this. If we look at this generic chart here, well, it meets all of the standards of support and resistance. You have your nice upward move, and then you have your pullback or support right here, and then the continued move. Now, normally you would say, well, here is the basic support, so I want to buy anywhere around here on this next pullback to the downside, so I'm going to initially put an order here to buy. All right, so what you do is you place an order, and it really doesn't hold. It doesn't really go much lower, but it still doesn't hold. So you think, well, maybe I jumped the gun, maybe this is the support level. So you decide to place another order in there because you feel, well, if this one wasn't support, well, surely this is support. So you want to buy some more, and look what happens, okay? Once again, there is no consistency in support and resistance techniques for trading pullbacks. The reason is they're too subjective. One trader's support is another trader's resistance. There are too many variables. Some support and resistance traders look at volume. Other support and resistance traders look at what the institutions are doing. It's too subjective. It's not cut and dry. Now here's another example of conventional wisdom telling us the correct way to trade pullbacks, and that's with Fibonacci levels, okay? Now Fibonacci levels, there's a number of different Fibonacci levels. I'm not going to go into all of them. We're just going to show you the most standard and basic, which is basically a 50% retracement level. And what this calls for is that you measure a move. Obviously, this is a downtrend. So you measure where the beginning of the move started to where the downtrend ended. All right? And these are the brackets right here. And what Fibonacci retracements will say is that we'll come up to a certain level. In this case, we're looking at the 50%, or I'm sorry, 62%. That's the percent level we're looking at. We'll come up to that level, and then we'll sell. And most likely that's where price will stop. So you decide to sell, and it works perfectly, right? So boy, you're excited. You can't believe it. This stuff works like magic. It got right up to that percent level, so you decide to do it again. So you see here that we started to go down again, all right, and we stopped. So now you just want to measure off the same 62% level. In other words, it retraces 62% of that bracket. You place an order in there to sell, and this time you think you're going to get a really nice profit, and lo and behold, look what happens, okay? So oftentimes they will work. I know traders who do very well trading support and resistance and trading Fibonacci, but overall, the majority of traders, myself included, can show no signs of consistency in trading these methods for pullbacks. It's just too difficult. They're too subjective, and there's no consistency. They work until they stop working, and then you usually give everything back. Now, here are, in my definition, the correct way to trade pullbacks, okay? Entering a trade, first of all, based on support and resistance and or Fibonacci levels is similar to picking tops and bottoms. They are extremely difficult techniques to master because they're very subjective, just as I said. Remember, there are traders who are able to do that, but probably 1% of the vast majority of all traders. The rest of us have a very difficult time, the 99% of us can't trade them that way. So in order to have a high probability pullback entry, one must first wait for confirmation that the pullback has concluded and that the market is headed back in your desired direction. So you see, in other words, we don't just want to hope and pray that price will stop at a certain level or at a certain retracement or at a certain point because the Fibonacci levels or because some support and resistance people said it would. We don't want to just hope and pray and just place an order based off that. What we want to do is wait and see that it's going in our direction. At least, we're not going to try and pick a top or a bottom, but we're going to have a little confirmation that we're going in that way, then the market is telling us it's okay to jump on board because we're going in our desired direction. This is the confirmation we're looking for. Now, if we look at the examples here, there are many ways in which to do this. Remember, we originally had purchased right here, and then we wanted to, based off the same parameters, buy once again. But this time we want to wait for confirmation. We want to see that whatever we're trading is going back in our direction. That's the confirmation we need. And so that's when we jump on board and buy. We don't just simply pick a bottom in order to hope and pray it's going to stop. And many times you'll have the confidence now that you see it's going back in your direction, and it will, okay? And after all, if it never starts to go back in your direction, well, then you didn't get in. It's the same way with the downtrend. We had originally sold here, everything worked out great, but we don't want to trade that way anymore. We don't want to just place a limit order and hope and pray that it stops. So rather than selling at the same parameters, we want to wait to see that it's going in our direction, our desired direction. This is called confirmation. So once we have that confirmation, well, we jump on board and sell, only at that time though, and many times it will go in our direction. This is what gives us consistency. Remember, I stated at the very beginning of the presentation, we're an educational company. We're not promising and we're not telling you that you're going to be hitting home runs with all of our techniques and all of our strategies. That's not our aim. That's not what we're going for. What we're searching for is consistency. And this is what all of our techniques and strategies have. They have a high level of consistency, because a strategy or a system that makes thousands and thousands of % per year will not sustain you, because they can just as easily lose everything the next year. How many of you have bought programs or techniques or strategies that looked great on paper, and then the minute you started trading and they didn't work anymore, they fell out of bed? All right, these are hit and miss techniques. What we're looking for is something that has 2 steps forward, 1 step back. That's what will sustain you for 20, 30, 40 years down the road. And this is what we teach. And confirmation is one of those techniques. Now, here are different types of confirmation that you can start using as early as today as we conclude this presentation. You have them on virtually any charting software. They're very simple and they're very easy to apply. And each one of these has a level of consistency in them. The first one is you want to wait for price to trade above the previous bar if you're going long, or below the previous bar if you're going short. This is giving you confirmation in some sense that you're continuing. So in other words, if we see this generic scenario here where you feel there's going to be a confirmation of that the price will eventually pull back and go back up, you don't want to just simply place a limit hoping and praying it's going to stop. Wait for price to trade above the previous bar. So in other words, say you got the signal right here that a pullback was in place. Rather than just buy at the market, wait for price to trade 1 or 2 ticks above. Okay? That's your sign that it's going in your direction. That's the confirmation. Another type of confirmation is to look for a candlestick pattern. Many candlestick patterns are based off reversal patterns. So if you're in a small contra trend, perhaps a candlestick pattern will tell you that that trend is ending. So if we see here, this is the contra trend or the pullback in a larger scale uptrend. And here's one type of candlestick pattern. It's a bullish engulfing pattern. So many times this will tell you that this downward move has concluded. Okay. Another way to find confirmation that the end has neared on the pullback is through an indicator. And what people like to do is look at overbought, oversold oscillators, different indicators to tell them that we're now going back in the desired direction. So if we look here, we have just a slow stochastic plotted at the very bottom on the exact same chart. We see here that this was the entire pullbacks action. We got into the oversold, and once the indicator crossed back up above, that's your sign that we are most likely going back up. Remember, these are all, very good techniques. I wouldn't say they're great, but they're good techniques that show signs of confirmation. You can use one, you can use all three, you can use a couple. It's up to you. But as you see here, they all worked in this pullback example. All right. So those are the 3 most common and, not, I wouldn't say extremely high, but high levels of consistency in using them. Feel free to research them and go back and study them, see if they can help you. But remember, the title of this presentation is The Correct Way to trade pullbacks. Not, different ways and that have some levels of consistency, but the correct way. By correct, we mean having the highest consistency that I've seen in 38 years. And in my opinion, the correct way to trade pullbacks is number 4, and that is trading with the PET-D. That's the Primo Early Trend Detector. What this is a tool I was introduced to on the floor over 30 years ago, and it's a proprietary color bar algorithm. Now, when I first started using it, we had this formula. It's simple, but something you have to calculate every day. At the time, over 30 years ago, we had no high-speed computers or programmers, so we had to only apply this for daily bars, because you couldn't write this out every 5 minutes or 2 minutes if you were intraday trading. So we could only apply this for daily bars. But now with the high-speed computers and programmers, we were able to program it so that you can use it in virtually any time frame, in any market, any direction. What we've done is we've devised it to become a color bar algorithm. So all it does is it colors the bars either green or red. If you have a series of green bars, you are in an uptrend according to the PET-D. And if you have a series of red bars, well, you're in a downtrend. It's that simple. There's nothing you have to calculate in this algorithm. It's proprietary, so we do it all for you. There's nothing you have to figure out. The only thing you have to do is apply it so you can see what the color of the bar is. Now, the bar does not repaint. It's not going to close at red and then recalculate itself, 5 bars down the road. Once it closes at a certain color, that's the color it stays at. So you don't have to worry about that. So how do we apply this with pullback trading? All right, here's the buy pattern we're looking for. Now, when you're in an uptrend, you're going to see a small amount of red bars that will appear. This is the pullback. This is the pullback you're looking for. But remember, we want confirmation that the pullback has ended. We're not going to place a limit order to hopefully, think that it's going to stop at this level, because remember, there's no consistency in that. We're just basically trying to pick a bottom. All right. So what we're going to do is we're going to wait for the next green bar that appears. That's our confirmation that the pullback has concluded. So that's all you have to do. If we look at this example here in Facebook, we see here that we're in an uptrend. And the reason we're in an uptrend is because we have an abundance of green bars. All right. And now we get a small amount of red bars, much smaller than the amount of green bars. Now, the first green bar we get is our confirmation that this has concluded. And here's our first green bar. So this is our buy setup. You simply buy there, and look what happens. See how simple that is. We don't have to figure out any Fibonacci levels. We don't have to look and see what the volume is and care about what the institutions are doing. None of that stuff. It's too subjective. It's too discretionary. It's too complicated. All you have to do is wait for the next green bar if you're going long. All right, how about if we're going short? What if we have a downtrend? Well, in a downtrend, the majority of the bars will be red, but you're going to have a small amount of green bars. This is the pullback. This is the little bounce to the upside. All right, so we're still not going to do anything. We're not going to try and pick a top. Now, the next red bar that appears is the confirmation that that pullback has concluded. So now if we look at this older chart of the E-mini, we see here that the majority of the bars are red. All right, so the trend is down. We have 3 or 4 green bars. Now, if we continue to have green bars, well, then we change the trend to up. All right, and we know now that we're in an uptrend. But if we have anywhere from 3 to 5 bars, it's telling us that this is just a pullback. All right, so we're looking for a red bar before we start to have a confluence of a lot of green bars here. And the very next bar is a red bar. All right, so on this 5-minute chart, this is telling you to go short the E-mini. The pullback has concluded because, see, we're in a downtrend. We're pulling back to the upside, and now here's your signal to go short. And look what happened, okay? Nothing you had to read, nothing you had to figure out, no charts and no looking at higher time frames to tell you what to do in the lower time frame. It's very simple. Trading is extremely simple. It's usually us that overcomplicate things. Just keep it simple. Follow the colors, and you'll be in good shape. All right, so now we have, once again, an abundance of red bars here telling us we're in a downtrend. And now we have about 5 more green bars followed by a red bar. That's our signal to get back in. And we go down again. Not that much, but that's okay. We're still in a downtrend. And another example to go short, and the market continues to go lower. So do you see, we just showed you a 5-minute bar and we showed you a daily bar. Works in any market, in any time frame. Let's show you some more examples that start off with stock examples for all you stock traders. All right, here's STZ. Now this is just coming into mid-September, so it's a very recent chart here. So this is not something that we're looking back and cherry picking only things that happened 6 months ago. This is something that happened just a couple of weeks ago. All right, so someone looking at this would say, well, all right, sure, we went up, but it looks like we're rolling over, and I think the market's going to go much lower. So I think that this trend is headed lower now. It looks like we topped out. We got a double top here. Plus the chat room that I follow says that we should sell this, sell the market. All right. Once again, it's the easiest thing in the world to overcomplicate your trading. Any trader can do that, whether you've been trading for 30 years or 30 minutes. It doesn't take a lot of character to do that. It's very difficult, though, to simplify your trading. But let me show you how to simplify it. Just add the PET D. Once you add the PET D, you see here that the majority of the bars are green. So what is that telling us? It's telling us about forget what all the people are saying. We're in an uptrend. That's it. That's all you have to say. We're in an uptrend. Now, we have one red bar that appeared. All right. This was on the 9th of September. We're still not going to do anything. We're not going to try and pick a level. We're not going to try and pick a Fibonacci level or anything. We're just going to look for the next green bar, which appeared right here. So this is our buy setup. All right. You could have gone long roughly at 127. We realize this is an expensive stock, but you could have easily purchased options if you wanted to, about long calls. It doesn't matter how you decide to trade this. Now, what a lot of our students say is they say, well, Steve, how do we exit this technique? And remember, this is just a technique. It's not a strategy, but a very common way to exit pullbacks is to simply go back to the last high, which would have been right here. And once you either reach that or close above that, that's your exit. Okay, that's just a very simple way to exit pullback. So you would enter at 127 and exited right here, roughly a week later at 131. Okay, so that's 4 points in about 4 or 5 days. Very simple, very easy and basic, How about Amgen? Another expensive stock. Someone would say, well, Steve, we've been really falling out of bed here. It looks like we're making a rounded bottom. I think we're bottoming out on this one coming in. I would definitely go long. All right, well, let's see what the PET D says. All the bars are red. It's telling us there's no way you should go long. Why? Because if we're in a downtrend, we don't go long. We only look to go short. We want to trade in sync with the trend. If majority of these bars were green, well, then we would be looking to go long. But since they're red, well, we're looking to trade pullbacks now. All right, and here's our first green bar. This is the pullback. See, none of this was considered a pullback by the PET D until we got to this green bar. All right, so we still haven't done anything. We're not going to try and pick a level based off volume or institutions. We're simply going to wait for the next red bar, which appeared right here. This was on the 21st, which was just last week. So you could have gone short Amgen, roughly about 150, and here's the last low. So one way to trade this would say, well, I'm short. If we get here or close below here, I'm going to cover my short. And let's look what happened in the last week. Stock went all the way down to roughly 139. So that's 11 points in about a week. Once again, you could have purchased options, could have purchased puts, or shorted the stock if you had a large enough account size. How about you all? Okay, this was a little earlier in September. Someone, once again, looking at this would say, Steve, there's definitely no trend here. We're in a range. We're going back and forth, up, down, up, down. This is just a whipsaw market. I'm not going to do anything. All right, well, let's apply the PET D and see what the PET D says. Majority of bars are green. The PET D is saying it's not a whipsaw market. It's telling you most likely it's going to go higher because it's in an uptrend. Until you get a confluence of red bars, you're in an uptrend. So look for buy setups. Okay? So if you're trading a pullback technique, well, we're not going to pick a level. We're simply going to wait for the next green bar. And there it is. On the 14th, there was a green bar. So that would have been your buy signal roughly around 57.5, 58. Here's the old high. If you wanted to use this technique, remember, this is not required. It's up to you. But if just as a suggestion, when you're trading pullbacks, go to the last high. And if price gets there or closes above, well, that's where you want to sell. So you could have purchased this roughly around 57.5. Look what happened. Stock went up to 61.5. Right? It's 4.5, 5 points in the next 4 days. Obviously, some news made that stock go straight up. We didn't know of any news. We didn't care about. We don't follow the news. Once again, that's just one more thing to overcomplicate your trading. All we care about is what the market is telling us, the chart we're looking at. Okay. And Yahoo, we can look at this. This is coming in at the end of August, beginning of September. Or someone would say, boy, Steve, we really fell out of bed here, but I love this chart. In one of my classes, this is a reversal pattern. We closed in the bottom, and then we closed higher. So that's a reversal. That means we bottomed out in Yahoo. So what I want to do is buy this. Okay, well, remember, we only want to buy if we're in an uptrend. I'm not saying that it's a bad trade, but we only want to be in sync with the trend first. So how do we know we're in sync with the trend? We add the PET D. So if we want to buy, these colors of the bars should be all green. We apply the PET D, and all these bars are red, except for this one. So there's no reason we should be buying Yahoo. There's no reason. It's not telling us that it's going higher. It's telling us it's going lower. Now, if we continue to create a series of green bars here, anywhere from 5 or 6 or 7, well, then obviously, yes, the trend has changed. But before we hit 5 bars, let's say, we're looking for the next red bar. And there it appears. It appears right at the end of August, beginning of September. So where you would be buying based off of what you read in a book or what someone told you in a presentation in a webinar, we're selling. All of our PET D course members are selling. You could have gone short at 33. And if you wanted to use this technique, once again, you pick the old low, because where people would say, well, Steve, why would you think it's going to go down there? This is a reversal pattern. We opened lower and closed. The market reversed. We made a really nice bottom there. We don't care about that. There's no consistency in that. So we're going to use this as our exit point because we know most likely it's going back down there. And we started to head down there, and guess what? We got another signal. So if you were so inclined, you could have shorted more, and ultimately the stock went down to 27 and a half, okay? MSI, here's another example at the end of August coming into September. And this one's difficult to figure out. You're saying, boy, I don't know what the trend is here. We were going straight up, then we go straight down. I wouldn't know what to do at all. All right, well, remember the PET D tells us the right side of the market to be on. So let's see what the PET D is saying. The PET D is saying that the majority of these bars are all green. We've only had 3 red bars. Now, if we have anywhere from 5 to 8 red bars, then obviously the trend is going lower. But until we get that many bars, we're looking for the next green bar. And there it is. So all this was a pullback. Okay, see how easy that is? So if the majority of the bars are green, here's our pullback, and here's our first green bar. Well, then we want to buy roughly around 63, and we're going to place our exit somewhere around here, up about 67. It's not a bad trade if we get up there. And look what happened. In the next couple of weeks, we went up to 69. That's our first close above that top. So that was a nice 6 points in a couple of weeks, just based solely off trading this pullback method, which is based on the PET D telling you what to do. Because the PET D really doesn't tell you what to do. The PET D is just interpreting what the market wants to do. And we're just following on board whatever the market says. The PET D is not a strategy. It's not any type of a tool that gives you buy and sell signals. It's just interpreting what the market wants to do. And so we're learning how to use the PET D to tell us when to get in and when to get out. We can look at WYNN, win here. Okay, once again, someone could say, boy, I don't know what's happening here. We're kind of in a range market, going higher, lower, then back up again. I don't know what to do. Well, let's apply the PET D. Now you know what to do. You want to sell. Why? Because the majority of bars are red. And so if the majority of bars are red, we don't want to be buying anything until the majority of bars turn green. So since we're going to be sellers, here's our first green bar, which is telling us a pullback is in place. We're going to sell once the market tells us the pullback has concluded. And it's right there on the very next bar. Okay, it's telling us the pullback is over. This is our confirmation. So you could have gone short roughly around 70 off of this technique, what the PET D is interpreting for the market. And here's where you'd want to cover once we get down to this level or a little below, anytime we close below that. All right, now here's the reason why I show you this example is because that is just one technique. I don't want you to think that, well, this is a system, this is some type of trading strategy, and I must exit this way each and every time. This is just a suggestion. Remember, we provide all of our students and members with suggestions and techniques I've accumulated in 38 years. But you decide, you make your own decision as to how you want to exit. Because you could exit based off what I just shared with you, and you'd have a nice little profit of roughly about 3 or 4 points in a couple of days. Or you could use another technique, which I teach in the course, for keeping you in much longer, and you could have gained a lot more points had you used that technique, okay? So remember, these are not systems. Not everyone should trade the exact same way each and every time, because everyone has different temperament, different risk parameters, different ways in which to trade. We provide you with this information, and then I mentor you along the way so you can feel comfortable making your own decisions. Remember, in my 38 years, I have found that that's the great truth about trading. All right? The only way to achieve consistency is to empower your own trading, to make your own trading decisions, not to mimic or repeat what someone else is doing. PNW, another example here, as we see, we're going to use the same approach, apply the PET D, and we see here that the majority of bars have been green. We have a couple of red bars. The very first green bar here at 61.5. We go back to the old high, and we can use this as a benchmark to exit. Now, if we wanted to, we could have exited right here at 63. So we just made a quick 1.5 in a couple of days. Or we could use other techniques which we teach in the course, which could have reaped another 2 or 3 points to the upside. Now, one of the best things about this technique is that you can actually use this as a tool to tell you the market direction as well. Let's look at the industrial average, the Dow Jones Industrial Average. This is the index for the Dow, all right, coming into September, mid-August level. Now, someone looking at this could have said, well, Steve, we have a nice rounded bottom here. There's a lot of nice financial reports coming out. I've been looking at earnings, and I think we're going to bottom out and make new highs, okay? Or they could tell me, as so many people I talk to always say, well, the guy I follow in his chat room says that we're bottoming out, that we've got to really go long because we're really going to, make some new highs here based on global economics and things with interest rates. And they always ask me what my opinion is, and I say, well, what's the PET D telling you? So if you would have applied the PET D here, we see that every bar coming into mid-August was red. So that entire time prior to the big smash in the market where we fell down thousands of points, the market was already telling us we're in a downtrend. You should not be long anything until you get a confluence of green bars. So the Dow was telling us already, in July into August, you should be short. Especially if you're using the Dow as an indice to tell you which side of the market to be on. Now, how do you get short? How do you use this as a directional tool? Well, you could have just used this the same way as I've shown you with the stocks, but rather than, we know you can't trade the indice. I'm sure you could trade the ETF, the diamonds, but to use this as some type of a filter for trading, you can use the same rules. Here's our first green bar right here, which was in the middle of August. And there was your sell signal. So right there, this was in the 18th of August, the market, not some guy in a trading room, not some guy on TV, not some guy in a webinar, not some teacher, but the market was telling you, I would sell because most likely we're going lower. And you can use the same technique, and we all know what happened after that. So there was no reason to be a victim and say, boy, this market caught me off guard. All the stuff that was going on with China or all these hedge fund managers and all their high-speed computer programs, there's no way a little guy can make a buck in the market. Don't fall, victim to that way of thinking. There's enough for everyone to go around in the market. You can trade any way you want to. There's no one who's in charge. The only person who is in charge is you. And all you have to do is learn how to listen to the market, because the market is most likely telling you all the time what it wants to do. But rather than listen to the market, we'd rather listen to some guy in a webinar tell us what to buy or what to sell. Remember, this is the way I used to trade, so I'm not trying to be condescending or arrogant. I know exactly what this is like because I used to trade this way, and trust me, my first year or two on the floor, I couldn't make a dime. So learn how to listen to the market, and you'll get on that road to consistency. You would not have lost any money in this large downward move that happened just this past month. All right, we looked at stocks, we looked at the industrial average, how you could have used that as a trend identifier. Let's look at the E-mini S&P. All right, let's start out with older examples here. Here's a monthly example starting out in 2009. Does not matter what time frame or what direction. Now, obviously, in hindsight, we're going higher, okay? But if you applied the PET D, we see here that once we had a confluence of certain color, we just use the same technique, and there are our buy signals. Same thing, okay? There's nothing different on a monthly scale. And we can go down to the next time frame, which is weekly. Same thing applies, all right? We're not changing anything. There's nothing that we would look, if the majority of bars are green, we look for the first red bar, and then the next green bar that appears, that's our buy setup. And you can use the same exit technique or hold on as long as you'd like. Let's go to something that more people trade. Let's look at a tick bars, okay? This is from last week, 1,000 tick bar chart, all right? Now looking back in hindsight, someone could say, well, Steve, originally the trend was down, but then it went back up, but that's easy to spot. Yes, but while it's happening, it's very difficult. All you have to do to get in sync with the market, though, is apply the PET D. Now, this is a 1,000 bar tick chart, or 1,000 tick bar chart, I should say, and we can use the same concept. We see coming into this at the end of this day here, which was last week, all the bars are red, so we're obviously in a downtrend. Here's our first green bar, followed by our first red bar, so that's our signal to go short, roughly about 1917. Here's the last low. We could use this exit technique if we wanted to, or we could use any other technique, but here's the close below that at roughly 1914. So that's a quick three points in roughly about 5 minutes, or $150 per contract, okay? Now, as the trend changed, we didn't have any more setups, but as the trend changed, guess what? Now we have a majority of green bars. Here's the first red bar followed by a green bar. Now, someone could say, well, how do you exit this? Once again, you don't have to use the technique I just shared with you. You could stay in and say, well, I'm going to make twice as much as my risk, or I'm going to try and make 5 points, or I'm going to try and make 3 points. Or you could go back to the last high, which is right here, and say, well, once we close above, that's where I'll exit. You could have exited roughly around 19.5 and entered around 15.5. So there's 4 points. So there's a quick 7 points roughly you could have made. Now this was just last week. Let me show you what happened this morning. This happened this morning on another tick chart, a 5,000 tick chart. But just to show you how this technique happens over and over again. We're not just trying to cherry pick what the best markets are this last month or 6 months and show you things that happened. This happened today, all right? Here's a 5,000 tick bar chart. If we look in the lower left-hand corner, this is on the 30th, September 30th, right here. All right, now someone once again looking at this would say, well, we gapped higher on the opening, and we started to go higher, and then we're just kind of in this whipsaw range, so I'm going to wait to see till a clear-cut trend has begun. Well, the way we find out what the trend is by applying the PET D. We apply the PET D, and we see here that the majority bars are all green. Here's our first red bar, roughly around 7 o'clock Pacific time, all right? Now, if we go into the majority of bars turning red, well, then we'll know that the trend has turned lower, anywhere from 5 to 8 bars. But if we just have 1 or 2, well, we can wait for the first green bar to appear. And there it is. There's the first green bar. You could have used that as your entry point to go long at roughly 1901, gone back to the last high here, and exited roughly in about 15 or 20 minutes at 1905 roughly. So that's a 4-point gain you could have made in just about 20 minutes, $200 per contract. If you're trading 10, that's $2,000. It's up to you, okay? But you see, this works all the time in any time frame, in any direction, and in any market, as we're going to see here with the Forex currency pairs as well. Here's a current chart of the euro dollar. This was going back, I believe, in August. As we see here, where we're going higher, a lot of people say, well, you know, the euro dollar was acting terrible. It looks like this is just rolling over. Okay, so some guy I went to in a Forex chat room says that we should be selling the euro dollar because it's hit some certain resistance levels. This is where the Fibonacci resistance is. We have to sell this. Remember, we don't listen to those things. They're too subjective. All right, if they work so well, then everyone would trade that style. It's too subjective. All right, there are, I said, some good traders that are able to trade it, but they're probably 1 or 2% of all traders. We want things that are easy to see, that no one can come up with a different scenario. Everyone looking at the same chart will come up with the same exact scenario. And that's what you do with the PET D. All you have to do is apply the PET D. Everyone can see that the majority of bars here are green. Now, there's no room for debate there. The majority of bars are green, so what does that tell us? It tells us we're in an overall uptrend. And what does that tell us? It tells us if we're in an uptrend, we're not going to sell. We're only going to be looking for buy opportunities. So there's no reason we should be considering selling the euro dollar until we get a confluence of red bars. Now we have one red bar here, which is on the 18th, I believe, of last month. And then there's our first green bar. So we could have purchased the euro dollar right here picked this old high and exited either at this close right here for a 100 pip gain or roughly $1,000 per contract, or held it for a couple more days for an extra $2 or $3 or $4 more $1,000. And then lastly, we can look at weekly charts. Totally different time frame, totally different market, the Australian dollar. We applied the PET D, and we see here that even though we kind of looked as if we bounced, made a double bottom, and we started to go higher, the majority of bars are red, telling us we're in a downtrend. We have to look for shorting examples. All right. So we have two green bars this time, followed by a red bar. Now this was in mid-May, coming into June on a weekly time frame. So you could have sold the Australian dollar here, regardless of what the news was, regardless of what the global conditions were. And you could have used this as an exit point, if only if you wanted to. And look what has happened to the Australian dollar. Now, obviously, there's a lot of news going on globally, interest rates, economic news, and issues that people can always use to justify why the Australian dollar has gone down so much. Well, we don't use or apply any of that. All we listen to is the market. That's the most important thing you should be listening to, because that's the actual source. That's what you're trading. All right? You're not trading someone in a chat room. You're not trading some guy on TV. You're not trading some educator in a webinar. You're trading the market. So that's what you should be listening to. All right, so let's recap before we go to questions and answers. I shared with you a simple but high probability technique for trading pullbacks in all markets, okay? We also shared with you some high levels of consistent confirmation techniques. Remember, that's either you can use a technique which calls for price to trade either above or below the previous bar in order for you to get in. You can also use a candlestick pattern or an indicator. But in my opinion, what I really feel is the PET D is the best way for deciding when the pullback has concluded, and it confirms that it's going back in the desired direction. So I want you to ask yourself, in conclusion here, and ask yourself honestly, do you think the PET D could have helped your trading this past year? I mean, go back and look at your last 10, 20 trades. Maybe if you had this, you could have really increased your odds for consistency. So we're offering you, all the attendees today, our PET D, our roadmap for any market, all right? In order to get you going into 2016, we really feel strongly that this is the best tool you can have in your arsenal to get you back on that track, on that road to consistency. It's a proprietary color bar algorithm. It includes the add-on so that you can add it on to your charting software, automatically coloring the bars red or green. It comes with 2 continuation trading techniques and 2 pullback trading techniques, all right? Also comes with a trailing stop technique for you to use. You can apply this to any market, any time frame, and the best thing is you have lifetime correspondence with me. Anytime you want to feel that you've maybe come up with a new idea on how to trade the PET D, many of our students do all the time, or you have a question, you can always correspond with me. Now, let me just show you something else that happened, because a lot of people are always saying, well, Steve, this is great, but you know what? It's no match for the news. How can this get in the way and help you with news? Because news events decide everything. Well, let me just show you something which happened in the news just last week. We've all heard about the news that happened with Volkswagen, okay? The terrible news. The chief executive resigned because of the emission scandal. It's stated here on the 23rd in the Los Angeles Times, Volkswagen chief executive Martin Winterkorn resigned less than a week after regulators said the company had used software to cheat U.S. emission standards. So this is very bad for the company, all right? The stock gapped down tremendously. And someone would say, well, Steve, you know, things like this that happen, you're going to get caught on the wrong side when they come out of the blue. All right, well, let me just show you what happened in advance to this. This came out on the 23rd. Here's the chart of Volkswagen, all right? It's an over-the-counter chart. It's not the greatest chart to trade, but still, this works on any market, any time frame. If you were looking at this chart coming into September, you could have said, well, Steve, there's no real trend here. It doesn't look bad. If you hadn't learned of any of this bad news about Volkswagen, you would have said that we could be building a bottom here, or just we're in a rangy market. But once you apply the PET D, what is the PET D telling you? It's telling us that the market wants to go lower because the majority of bars are green. In fact, are red. The majority of bars are red here, so the market is telling us through the PET D that we are in a downtrend. We are in no way in an uptrend. So there's no way we should have been long, first of all. So you wouldn't have been hurt at all. Now, if you wanted to be on the right side of the trade, well, here's the pullback technique. We have 2 green bars followed by the first red bar. Now remember, that news came out on the 23rd of September. But this technique I just shared with you, well, here's the first red bar. That was on the 14th. That was about almost 10 days prior to that news coming out. Remember I said before, and I've said it many times in today's presentation, the market always tells you what it wants to do. You know, don't listen to news or outside sources. Many times the market tells you in advance what it's going to be doing. So you could have used this simple technique, which I shared with you today, to go short on the 14th, almost a full 10 days prior to that announcement. Use the exit point I share with you, or use your own exit and reaped all the benefits, because this is what happened in the next week or so. So this is just an example of how many times we are on the right side of the news because the pet D is listening and interpreting the market, and then therefore you're learning what to do. Okay. Now I know a lot of you would say, well, okay, well, I kind of get this technique, but I really don't need the pet D. I can just kind of figure it out for myself. Here's a chart of Apple, and you could say, Steve, you know, there's the pullback right here, and I've noticed that usually the first green bar that appears is going to be on an up bar. So, right, something like this. So I don't really need the pet D because most likely here's the first green bar, so I'm going to buy, right? So there's no reason for me to get it, and I'll just exit once we close above this high. And I got it already. It's pretty simple. So why would I need the pet D? All right, well, let's say you had done this, applied this to Apple. Well, let's apply the pet D to Apple. And did that bar ever turn green? No. In fact, all of the bars have been red coming into this scenario. So you wouldn't have bought anything. And the pet D would have kept you out of trouble the entire time. So it's not just safe enough to think you know the technique. You really need to have the pet D. Remember, this is a roadmap for any market. You can trade it in any direction, in any time frame. All right, so here's how to get this great tool, something I've been using for over 30 years. Here's the pet D application and course, $24.95. We know it may be priced higher than what you can afford right now, but the best news is we have payment plans available. So you do not have to come up with that sum in order to be applying and using the pet D as early as today. What you can do is contact Pro Trader Strategies. They're the site I've teamed up with that market and promote all of my courses, and they can put together a payment plan for you. So with a small deposit, you can be up and running right away, okay? And remember, you have lifetime access to this. This is also what we're including today. This is not something where we may go into some type of a lease arrangement, which is very probable within the next year or so. This deal we're giving you today is for $24.95. It's yours for life, including lifetime correspondence with myself. So we strongly suggest you take advantage of this price, as well as the payment plans, as well as the lifetime access deal. Now here's how to take advantage of this, by simply contacting protraderstrategies.com, and you can set up that really great payment plan with them. You can email them at trading@protraderstrategies.com, or you can call them directly at area code 310-598-6677. And the best thing to do is to contact them, as I stated, by simply calling them, and they can put together that really easy and basic payment plan, so that there's nothing you have to worry about. You don't have to come up with that sum. You can have it automatically, and it will be right there for you, okay? Another thing to do is to contact them. You can email them, and I believe they're posting the link in the chat box on your go-to webinar page, and so that will be a live link there. You can simply go there if you want to just automatically sign up and be up and running. Now I'm going to leave this information right here on the screen so that you can call them or contact them and set together some type of payment plan. But I'm going to also open up the question and answer box for all of you to ask me questions. And I want to thank you for waiting. I know a lot of you had some good questions, and a lot of you were waiting, so thank you for being patient, okay? Let's see, Kevin. Kevin is a student of ours. He's a great student, a great option trader. He asked a question. He goes, hi, Steve, you explained when to do the pullback trade. How do we know we are on the verge of a pullback, long or short, before we have a pullback trade? Does the pet D help in this case? Yes, it does. The first thing we look for, Kevin, is the consistency of, or the number of colored bars. So in other words, that tells you right off the bat the initial trend you're in. And after a little practice, you'll get to see that right off the bat. So in other words, if you see, 10 to 20 green bars, you know right off the bat you're in an uptrend, all right? And The first red or one or two or three red bars will tell you that that's simply a pullback. Now, we still do not do anything yet because we'd be jumping the gun. We have to wait for that first green bar to appear. So let's say we have two or three red bars. Then we have another red bar. Then we have another red bar. So now we have 5 red bars. Now we have maybe one more. At this point, I would say, you know what? This is no longer a pullback. This looks like we're at the beginning of a downtrend. So guess what? You haven't lost anything because you never entered. And now you're looking at things from the sell point of view, because now we're most likely beginning a full-fledged downward trend. You just simply reverse the process. Now, another great thing about the PET-D is that oftentimes in these whipsaw markets, you'll see the market going up, down, and there you'll see 2 or 3 green bars followed by 2 or 3 red bars, then 1 or 2 green bars, 1 or 2 red bars. So that's great. That's keeping you out of trouble. Many people say, well, you know, this is not going to work in a ranging market. Well, you don't want it to, because you most likely be whipsawed and you most likely be stopped out. So the PET-D will not show you any type of range, any type of trend, because you're in a range. So that using this technique will keep you out of trouble right there. So that's the beauty of the PET-D, okay? Robert asks, can I use the PET-D with eSignal? I believe you can, Robert, but you know what, just to make sure, I would check with ProTrader Strategies. I know the basic charting software packages you can use the PET-D with are TradeStation. You can also use it with Metastock, with MT4, with NinjaTrader. It works very well with NinjaTrader. And you can also use it with Thinkorswim, but there's a few things you just have to simply alter. You use the data you receive for Thinkorswim and you apply it to a NinjaTrader platform. But NinjaTrader is free, so there's nothing you have to buy. If you already have Thinkorswim, you just use their data and transfer it on to NinjaTrader, and you're up and running instantaneously. Okay, call the people at ProTrader Strategies. They can put that together for you. They have a great tech support staff there, and they can set that up for you for no charge. Okay. TR says, Steve, would you kindly continue Apple using the PET-D? Thanks. Unfortunately, TR, this is not a live presentation. It's static. I just have the PowerPoint presentation right now. I don't have access to live charts, so I really can't share anything else with you. But that's the beauty of the PET-D. You can virtually look at any chart, any time frame. You can look at monthly charts. It's not required for you to look at a higher time frame to go down to a smaller time frame, but you can do that if you'd like to. Some of our students do use that technique. And they say if the weekly chart is green, then they want to see the daily chart green as well. It's up to you, but we don't require that at all. But unfortunately, I'm sorry, that was a static chart on a PowerPoint presentation. I can't continue that, okay? Asking how the SPY looks right now. Well, most of the, I could just tell you that most of the stocks and futures and indices that have gone down in this last movement are still red. So you saw in that industrial average chart I showed you, and that's where the market fell out of bed at the end of August coming into September. Well, most of the bars have stayed red. Some of them have turned green, and they've created some great pullback scenarios once again. In fact, this last week, as I shared with you, that was a great pullback scenario to go short the futures. Our E-mini S&P on our Twitter page, we talked a lot about the sell signals that were generated. So, once again, you can have this all up and running for yourself if you just, want to come on board and become a student of our PET-D course, okay? Helena asks, does this work on TradeStation? Yes, it does. In fact, Helena, all the examples I just shared with you today are all from TradeStation, okay? And it works great on TradeStation. Once again, people are asking which charting packages it works on. Remember, it works on MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim, but you have to just alter things with Thinkorswim. So what we do is we use the data that if you from your Ameritrade account, and you just simply transfer it over onto a free NinjaTrader platform. We set that all up for you, so there's no real problem. Don't worry if you don't know how to do that. We can put that together for you, and it's very simple and very easy and basic. Okay, it works great on NinjaTrader. All right. Lee asked, does this come with buy and sell signals? Well, remember, once again, Lee, this is not a strategy. Only a strategy comes with buy or sell signals. This is just a roadmap. It's a great trend identifier. Now, within this course, I show you different techniques, such as I showed with you today, on where to buy and where to sell. But really, it's going to be up to you. You're going to have to make your own decision about where you want to buy or sell. I'm there with you every step of the way. You can correspond with me just to make sure you understand it. But we only furnish buy or sell signals for strategies. Remember, this is not a strategy. The PET D, all the PET D is interpreting what the market wants to do. It's probably the best trend identifier I've ever seen in my 38 years of trading. I've been using it for that long. I use it on a daily basis. So it's a strategy. It comes with a set of rules: where to buy, where to sell, where to place your stop, where to, money management, things of that. This is just a trend identifier. All it does is changes the bars. And someone could say, well, what do I do? I mean, how do I apply it? That's what's taught in the course. This is what I teach you in a course. It's a full-fledged course where I show you what to look for, different techniques, different styles in which to trade with it. Okay? And remember, you can apply this to virtually any strategy you have. Let's say you're currently using a strategy that's not great, but it's okay. The PET D will enhance that because it will make sure you're on the right side. So let's say you've had a series of losses in your strategy. You go, boy, I like this strategy, but it's not been doing very well lately. I can almost, I can't guarantee anything, but I can almost promise you, if you had the PET D, most likely the PET D would be telling you, if you got a buy signal, you shouldn't be doing that because most of the bars are red. Remember, if the bars are red, we only want to be getting sell signals. It doesn't matter, the PET D does not care what strategy you're using. It's just designed to get you on the right side. It's designed to share with you what the market wants to do. So you can use any strategy you like, but I also give you 4 different techniques to apply in the course. So it's really a great value. And here we're coming on the end of 2015. If your trading is not where you really wanted it to be, everyone makes promises of what they wanted their trading to be at the beginning of the year, and most of us never reach those goals. If you really want to ramp up your trading in 2016 to get to that level of consistency you've been searching for, I can't think of a better tool than applying the PET D. It is, in my opinion, one of the greatest things that's helped me in terms of my consistency in the past 38 years, okay? So you can take advantage of this price before we possibly go into licensing it. And if we do that next year, you may have to pay for it each and every quarter. And so it's going to be a lot more expensive. This way you have lifetime access to it. It's yours for life. It works on all those different charting software packages, and we have great tech support to help you set it up, okay? In closing, once again, that's the information you need right in front of you. Contact the good people at Pro Trader Strategies. They're a great company, great tech support. You can contact any one of their trading consultants, and they'll put together a small, type of payment plan so that you can be up and running as soon as possible. Without having to come up with that large lump sum, you can be up and running very quickly. So don't worry if you don't have the $2,500. You can have a relatively small deposit, and you can be up and running soon. So give them a call at 310-598-6677. And in closing, I want to say thank you so much for attending today. Thank you for taking time out of your day to come and watch this presentation. I wish you all the best of luck, and I also look forward to all of you becoming students of mine in the PET D course and members of Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.